All right, we are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your Money Show host for this session. I do have Matthew here with me in the Zoom room, ready to begin his presentation on time at 3:20 p.m. That is Eastern Time, coming up in just a few short minutes. If you're looking for something to do while you wait, feel free to scroll on down to Jennings Global Virtual Booth right below the video player here. They do have a copy of the slide deck and I believe some other handouts for you if you're interested in some more information. Thanks so much for your patience. And once again, we'll be getting started soon. Hello again, everyone. Welcome to those just joining us. This is your Money Show host, popping in once more just to let you know that the next session will begin on time in a couple of minutes now at 3:20 p.m. Eastern Time. Thank you. Hello, everyone, and welcome. Joining us for this session is Matthew Tax King Jennings, an advanced tax strategist known for revealing powerful, little known tax advantages used by the wealthy. Now, Matt helps qualified purchasers reduce taxes, strengthen asset protection, and leverage tools like PPLI to elevate long term wealth strategy. Now, to our live viewers, please share any questions or comments you may have throughout this session in the live chat box. It's to the right of the video player on your screen right now if you're watching us. We will do our best, to get to your questions at the end of the session, time permitting. And Matthew, with that all said, I will hand the mic over to you. I'll be here if you need me, but the floor is all yours.
Thank you. Lights, camera, action. I'm Matthew Jennings, and welcome to my presentation. I am managing partner of Jennings Global, and we're going to be talking about private placement life insurance today. Yes, the acronym for that is PPLI, and we're going to show you how to protect your wealth using PPLI. Next slide.
Sorry, Matthew, I just want to remind you, yes, that we are doing the screen share for this one.
Okay. Um, some of you might know Kevin Harrington or might remember him from the Shark Tank, one of my favorite shows. But we have an endorsement from Kevin and among other endorsements, but this is one of the endorsements that I'm proud of because they do a lot to help American entrepreneurs. I just love that show. I'm a serial entrepreneur myself because I started my first business when I was 18. So I love to see people go on there and try to, get in investment funds and capital from him. Tax King Matt is what they call me. And one of the reasons why they call me Tax King Matt is because of the many credentials that I have. I just love school. I'm sorry. I just love school and I love learning. But I have a JD in law, Juris Doctorate in law. I have an MBA in finance, and I was working on my doctorates in finance because I was teaching at the time. But I decided that I didn't want to continue teaching, and that's when I decided to pursue my law degree because I really love law, I really love justice, I love fairness and equality and all those beautiful words. But in any event, I also have a BS in management systems. I used to be an IRS enrolled agent, which is the highest designation that you can get in tax. I'm thinking about picking up that credential again. It's just a matter of me, getting current with my CE credits, and we all know about that. If any of you in the room have, any license, you know that you got to keep those license current by doing those continuing education credits. But again, I do so much research and I do so much learning and taking different classes and stuff that I'm always, up to speed on the latest, especially in tax law and things of that nature. I'm also a registered financial consultant, certified estate planner, certified trust specialist, certified researcher. And one of the things that I'm mostly proud of is I'm also a U.S. Marine. Hoorah! And I did serve in the Gulf War. Why do clients choose me? First of all, they choose me for my expertise. I started doing taxes in 1991. In 2005, I started actually consulting small businesses in the areas of tax. And when I went to every single client, I always got the question, how do I save money in tax? And at that time, I wasn't really well versed in taxes. I just knew how to do taxes the way, CPAs do them and normal accountants do them. We basically try to find as many deductions as we can. And that's basically it. You can't really, go further than that. But then when I started doing research, I realized that there were some clients and some people that don't pay tax. And I'm like, how is this possible? Because one of the things they instituted in the tax code in 1969 was the alternative minimum tax. And alternative minimum tax, basically what that does is once you reach a certain level of income, let's say 500,000, somewhere along those lines, they're going to add back all your deductions that they normally would give you. So there comes a point in time where you make so much income that you can no longer take deductions. So if they take away the deductions, what do you have? You're just basically paying the highest tax rate, 37% on all of your income. Like, who can escape that? I had to find a solution to that problem, and I did. And one of the things that helped me find a solution to that problem was my research. Um, because I'm basically well versed in not only just the legal aspects of things, I'm also well versed in tax law. I'm also well versed in financial concepts as well. We have the solutions, and those solutions that we have for you are custom, they're discrete, and they're compliant. Private placement life insurance is the holy grail of all tax strategies. It is the holy grail, which means there's nothing better. You know why? Because it is a tax exemption, and you cannot get better than tax exemption. Remember, I discussed earlier about the tax deductions. But you got the tax deductions that lower your taxable income. You also have tax deferrals. A tax deferral is basically saying that, listen, you're going to pay tax You're just not going to pay the tax now. You're going to pay it sometime in the future. That's a tax deferral. And tax deferral, in many instances, can save taxes too, because sometimes we're in a lower tax bracket in the future. And as we get older, it just depends. Sometimes we're in a higher tax bracket because as we get older, we make more income, we get more investments. So it just depends. But in any event, we do have the solution for you. And people do trust us. Again, we have great referrals, we have great endorsements, so people do trust us. The services we offer basically align with estate planning and asset protection. For those of you that do not qualify for private placement life insurance, you will qualify for asset protection. Why is asset protection important? Because the greatest two threats to your wealth is going to be taxes and litigation. Those two things are constantly fighting for your wealth. Taxes are fighting for your wealth at 37%, the highest tax bracket, federal. Then there's state tax, the highest is California at about 13%, New York at about 10%. So some of you are looking at 50% of your income being taxed, especially if you get above, again, that 500,000 threshold where they add back all of those deductions that they took out for the lower tax brackets. They add those back, and you get to a point where you're just paying 50% on what you make. That's just not right. But in any event, the asset protection, if the taxes don't get you, the lawsuits are going to get you. And what are the lawsuits? You got divorce, you got child support, you got all these different, you got, auto accidents, you got dog bites, slip and falls, sexual harassment, wrongful injury. You got all these different lawsuits. And statistics say that most of you will get sued about 4 times in your life, 4 times. And I've seen lawsuits basically take everything from a person. I have a client now, she basically sued someone and she got a 10 million judgment. And that 10 million judgment is going to wipe that person out. It's gonna take everything they worked hard for. So, we're living in a litigious society. We're living in a society, we're living in states where it's just nowhere to run. Tax, 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 tax on everything. Estate planning, for those of you that have the bigger estates who qualify for estate planning, and you want to avoid probate, and you want to avoid estate tax and generation skipping transfer tax and gift tax and all those types of taxes, you definitely want to have a good estate plan in place. Why should you be interested in private placement life insurance? Because you're going to avoid income tax. You're going to avoid that 37% federal. You're going to avoid that 13% California, that 10% in New York, that 5% in Michigan, and all these other states that have tax. And there's just some states that don't have tax, like Florida and Nevada and stuff. But, for a lot of you, you're looking at, state taxes as well. And the state taxing authorities are sometimes worse than the IRS. California Federal Franchise Tax Board, way worse than IRS as far as collecting. New York taxing authorities, way worse than IRS in collecting. So yeah, they get very aggressive. You're going to avoid tax on capital gains. A lot of you have real estate, and you're always faced with those huge capital gains from those sales. A lot of us have real estate that appreciate like tremendously, so you avoid that. What can I say about gift tax, estate tax, and generation skipping transfer tax? Those are probably the worst tax of them all, because you work your whole life, you make all of this income, you accumulate all of this wealth, and they won't even let you die in peace, because here come gift tax, estate tax, generation skip transfer tax saying, hey, we want our share. And gift tax is 40%. Generation skipping transfer tax can be, I've seen where it's been 80% at times. So those transfer taxes at death can decimate an estate. And we won't even talk about probate. Probate attorneys charge about $2,000 per hour, and they pit the families against themselves. So the families are always fighting, and they just rack up the hours. And you have very famous people who have died years ago, and there's states are still in probate. Elvis Presley had an estate that was in probate for forever. You have, Prince estate that's in probate. You got the Queen of Soul, Aretha Franklin, her estate is in probate. I mean, it's just bad. Also, you got the asset protection. This is ironclad asset protection. Private placement life insurance, no one can get to those assets when they're into the policy. Nothing or no one, nothing can get to them. Absolutely nothing. When I say nothing, I mean nothing. It's great for international tax planning because as a U.S. citizen, you're taxed on worldwide wealth. There's nowhere you can run. That IRS hand is stretching out if you go to, anywhere outside of the US, any income that you make. So this protects against that. Increased privacy. If you have no W-2 income and you haven't, if you don't have Social Security income that's taxed, you have no pension, you have no regular IRAs or anything, it's most likely when you sign up for private placement life insurance, you won't have to file a tax return anymore. So you are off the grid. So you have that increased privacy. Provides flexibility because you can basically, you have freedom. Once you have financial freedom, especially, I mean, there's a lot of people that talk about financial freedom, but you can't have true financial freedom without first addressing tax. We have all of these finance experts that never talk about tax and what to do about tax. So, what good are you if you can't address tax, which is, again, one of the biggest threats to wealth? And it provides a permanent tax exemption. As long as those assets are in the policy, they are exempt from tax. What makes PPLI different? And I'm going to be really quick with this slide. The difference between traditional life insurance and private placement life insurance is the premiums. In a traditional life insurance policy, you pay 100 a month, 500 a month, 250 a month for 100,000 of coverage, a million of coverage, or whatever it is. With private placement life insurance, your assets are your premium. So if you have 2 million in Bitcoin and you have 3 million in rental real estate, that 5 million in assets, that's your premium. So you can think of it as a paid in full premium. But that's the major difference between traditional insurance and private placement life insurance. And the other really big difference in the two is that traditional life insurance is very expensive. Your first year premium is basically going to the agent. He's basically getting all of your first year premium as a commission. With private placement life insurance, the insurance company only gets 1%. 1%. So it's very cheap in comparison. I'm gonna rush through the slide too as well because we'll get into this deeper on the one-on-one sessions that you have with me. But basically, you have an insurance policy, and we put that insurance policy inside of an ILIT, which is an irrevocable life insurance trust. And the irrevocable life insurance trust is the owner of the policy. And the reason why we do that is because the policy protects you from the income tax. But a life insurance policy is still considered part of your estate. So in order for us to take it out of your estate, we put the policy in an ILIT. And so once it's in the ILIT, you're going to avoid those nastier taxes, which are the gift tax, estate tax, and generation skipping transfer tax. Income tax benefits. Again, we have that portfolio of assets. We put that in the policy. We put the policy in a trust. And as long as those assets are in the policy, those appreciation, that gain, that income is not subject to tax. No tax, zero. In this slide, it gives you an illustration of the diversification of assets. So we got A, B, X, D, and Y. So let's just say, for example, your A is your rental real estate. B is your Bitcoin or your cryptocurrency. X is your cash. Cash can be CDs, money market accounts, all of that liquid cash that you have. D could be, other stocks and bonds that you have or mutual funds or whatever. And Y could be privately held stock or membership interest. If you are an owner of a corporation, or if you are a partner in a partnership, you're gonna have stock, or you're gonna have membership interest. We can put that in the policy. We're gonna run through this slide really quickly too. The only thing that I'm really gonna touch on this slide is withdrawals. You got your money in the policy, it's doing great. You're not paying any taxes. That money is just growing, growing, and growing. Well, how do you get the money out? You're gonna get the money out like you would any other normal insurance policy, is through policy loans. And the policy loans is going to be based upon the cash surrender value. And that's going to be all of the cash and assets that you put in there, and all the appreciation, all of the gain. And obviously you're gonna take out a little here, a little there, because you want, the purpose of this is for your wealth to accumulate tax-free. So you don't want to be taking all of the money out, because then you won't have a policy any longer. So when you do need cash, you need access to cash, you'll be able to get that cash through policy loans. We're going to skip all of this mixed stuff, because again, that gets into, some technical stuff again that we'll cover in our one-on-one sessions if you decide to talk to me at a later date. So again, you got this money, it's in this policy, it's growing tax-free. And the other thing that I briefly touched upon was, the tax-free death benefit of the insurance itself. We talked about you having assets in the policy. Well, you got your assets in the policy, which makes up part of the policy, but the other part of the policy is real insurance. They have to put some real insurance in there to make it be an insurance policy according to the code. So let's just say, for example, you have 5 million in assets, and then we're going to put another 3 to 5 million in actual insurance. So the death benefit won't be just your assets of 5 million. It's going to also be that life insurance too. So if you got 5 million in assets and then you got 5 million in insurance, that death benefit is going to be 10 million. And the good thing about having insurance is that insurance, pure insurance, is a hedge against poor investment performance. Because typically with an insurance policy, if you keep the insurance policy and it doesn't lapse, most likely you didn't pay more into that policy than it's going to pay out. What I mean by that is, if you have $1 million policy and it's paid in full, the policy is said there's no way that it can lapse because it's paid off. Most likely you didn't pay $1 million into that policy. You might have paid 100,000, 50,000, whatever you paid into that policy. So that policy is going to pay you way more than what you invested into it. And we don't really like to think about life insurance as an investment, but it kind of is. It kind of is an investment, and it kind of is one of the best investments that you can make. With this, I'm going to end the presentation, and I'm going to open it up for questions and answers, because I really like to do question and answers, because I think people learn a lot more through that than to just hearing me speak. So we're going to open it up for questions at this time.
Fantastic. Thank you, Matthew. And with that said, anyone who is sitting on a question right now, feel free to send that in the live chat box, and we'll be sure to get to what we can. I did have a question that came in from Theodore earlier. He was asking if these methods are valid for Canadian clients.
Private placement life insurance is valid in 116 countries, and Canada is one of those.
That's fantastic. And that I'm going to give the audience just a couple minutes here to catch up with us, see if they have any more up. And looks like someone already came through with another question. This one's from a Mr. Castleman. He asks, who owns the assets placed within the policy, and do you maintain control of them?
The policy is owned by the insurance company. Well, it's managed by the insurance company, but it's owned by the policy. The policy has a trustee, which you control. So you are the ultimate owner. As the client, you are the ultimate owner. And it's the same concept that we learned from Rockefeller, which basically says control everything, own nothing, because with ownership comes, again, tax liability and legal liability. So you want to be able to control and use the asset without having the liability. And it's just like owning it. Controlling something is just like owning it. If I gave you keys to my Ferrari and I say, here, drive this car whenever you want. Why would you want to own it? Why would you want to buy one when you can drive it whenever you want to, do whatever you want to with it? And that's basically the concept of control. So, yes, you are the ultimate control, person in control, and you are the ultimate owner.
Thank you, Matthew. And I guess now we will wait to see if we have some more questions that come in. And while we do wait, are there any frequently asked questions, Matthew, that you tend to get when you do these presentations? Something that you think our audience might benefit from hearing?
One of the questions is, you know, why doesn't my CPA know? Why doesn't my tax attorney know? Because you can't fact check them on private placement life insurance. And this is the reason. Approximately 0.3% of Americans make over $1 million. 0.3%. That's about 1 million people. So, because this strategy is only used by the ultra wealthy, private placement life insurance is a tax strategy that's not taught in any college program, any university program, is not taught in law school, is not taught CPAs, is not taught to LLMs, it's not taught to tax attorneys. There's no vocabulary, no vocational program. There's no private study program, no self-study program. There's no way that you can there's no program that teaches this strategy because only 0.3% of the population will ever be able to use it. So your CPA isn't going to know, your tax attorney isn't going to know. I mean, there's a handful of individuals in the world that operate in this realm. And the only way that you're going to learn this is through research or a private tutor. I found a private tutor, and well, actually, the private tutor found me. And it took, I don't know, it took, I want to say, almost 30 years into my career before I learned about this. So, and I paid the private tutor $1 million to learn this education that I know. So
Wow.
it's going to be hard to find an individual that knows it. So, but you can ask Chat GPT. Chat GPT knows. You can ask Chat GPT about private placement life insurance, and Chat GPT will tell you that you can avoid paying taxes by utilizing private placement life insurance, which has been around since the 80s. It's solid. It has treasury regulations. It's been through the courts. There's legal opinions on it from the top law firms in the world. It's never been overturned. It is solid as it gets.
Thank you, Matthew. We do have a couple more questions here now. Mr. Castleman was asking, what about passing down those assets to your heirs?
Your heirs will be the beneficiaries on the life insurance policy, so it's going to go to them tax-free.
Thanks, Matthew. And the last question we have here is from Hasu. Now, Hasu, we do have these contact details below the video player in the virtual booth. But Matthew, if you wouldn't mind just sharing, what's the best way to get in contact with you guys?
You can call and set up a meeting. You can email. You can text, and give us some availability, some times or some dates that you're available, and we will definitely make that work for you.
Well, fantastic. I'm going to go ahead and put in the phone number that we have listed in the virtual booth here for those of you in the chat if you are interested in giving a call. And with that said, I think that we are caught up on questions. Matthew, do you have any closing notes that you'd like to share before we finish up here?
Um, I want to talk a little bit about maybe, some of us, we think about like our duty as Americans to pay tax. But we have to realize that, first of all, this country was founded on the premise of low tax. And I'm not saying that, not to pay any tax at all or to avoid your duty. Your duty as American is actually to pay the least amount of taxes by law, legally by law. But I think a lot of us don't agree with, how our leaders spend the money. A lot of our public services are paid by the Treasury just printing money anyway. And our tax system is basically a redistribution system. And a lot of that money doesn't go to pay for any of those services anyway. So I say this to say, don't feel bad. Um, don't feel bad if you can go from paying 50% taxes to paying 3% or 7% or 0%. Don't feel bad about it, because again, it's your duty as an American, to make the best future, because we basically fuel the country anyway through our efforts, through our, us building the infrastructure. It's not all about, taxes. It's more about, the input and our benefit to society as a whole. So don't feel bad about, saving money on taxes, because the government is just going to print money and have a deficit and pay for the services anyway.
Well, Matthew, thank you so much for joining us today, giving a fantastic presentation, and for taking some time to answer some audience questions here. It was wonderful.
You're welcome. And I thank everyone for showing up.
Yes, and another thank you to those of you joining us live from us at Money Show. Be sure to stay tuned, as we do have more in store for you today and tomorrow in this Money Show Virtual Expo. I hope everyone has a wonderful rest of your day. Take care.